Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll do now one question of dissolution of partnership firm where cash as well as bank balance is given in balance sheet. We are required to open only one account, that is bank account, to record realization of assets and liabilities. When cash as well as bank account is given, there is no need to open both the accounts. Amount of cash should be transferred to bank account, or cash bank account commonly can be opened and cash amount and bank balance can be added on debit side to show to balance brought down. Let us read question. Umesh and Prakash were partners sharing profits and losses in proportion of 3/5 and 2/5 respectively. They dissolved their partnership firm on 31st March 2011 when their financial position was as under. We'll start with asset side. Cash in hand 500, cash at bank 1000. This cash will transfer to bank account so that we'll have only one account. Debtors realization account debit, RDD realization account credit, stock realization account debit, machinery realization account debit, furniture realization account debit. Let us start with liability side. Sundry creditors realization account credit, Umesh's wife's loan. Umesh is a partner. Umesh's wife's loan will be outside liability, so it will be transferred to realization account credit side. There is no need to open separate loan account. Profit and loss account. This is surplus, this is profit. This will be transferred to partner's capital account on credit side in profit sharing ratio. Capital account of Umesh, Prakash, capital account credit. The assets realized as under. Goodwill 7,500, one asset. Here goodwill is not appearing on asset side, but there they have given goodwill is realized. So goodwill is an unrecorded asset which is realized at the time of dissolution. Stock 60,000, second asset. Debtors 27,000, third asset. In all these three cases, we have received cash. So our entry will be cash bank debit, realization account credit. Machinery was taken over by Prakash at rupees 20,000. Here Prakash account will be debited, realization account will be credited. Entry will be Prakash capital account debit to realization account. Furniture by Umesh at book value. Book value of furniture 15,000. In this case, Umesh account will be debited, realization account credit. Entry is Umesh capital account debit to realization account. Umesh agreed to discharge his wife's loan. This is case where partner has taken one of the liability of business. Realization account debit and Umesh capital account will be credit. The creditors were paid at a rebate of 1500. Creditors are 7500. Rebate means discount 1500. So creditors are settled at rupees 6000. There will not be any entry for 1500 rebate. Actual amount paid 6000 will be recorded. Cash goes out. Cash bank credit. Realization account debit. The expenses of dissolution amounted to 3000. Amount goes cash bank credit. Realization account debit. Pass necessary journal entries in the books of the firm. In this question they have asked journal. We can record all journal entries without preparing ledger except two entries. That is, entry for finding profit or loss and entry for recording final settlement of partner's capital account. Whatever entries we can do without ledger, that we'll be doing first, and then we'll be doing last two entries by preparing working note. First step of solving problem is transfer step. Here we transfer all the items given in balance sheet to various accounts. Let us start with asset side. Cash in hand 500, cash at bank 1000. Let us transfer cash to bank account. Bank account debit 500 to cash account 500, being cash deposited into bank. Next assets we have debtors gross 33,750, stock, machinery and furniture. These will be transferred to realization account at book value, that is balance sheet value. Realization account debit 1,38,750, to debtors 33,750, to stock 67,500, to machinery 22,500, to furniture 15,000, being assets transferred to realization account. This entry can also be passed like realization account debit 138,750 to sundry assets 138,750. Here we have RDD 3750. This will be transferred to realization account. Entry is RDD account debit to realization account. RDD account debit to realization account 3750 being RDD transferred to realization account. We have transfer all assets. Now we'll be transferring liabilities. Sundry creditors, Umesh wife loan will be transferred to realization account. Entry is sundry creditors account debit, Umesh wife's loan account debit to realization account. Sundry creditors account debit 7500, Umesh wife's loan account debit 6000, to realization account 13500 being creditors and loan transferred. Profit and loss account 9000. This will be divided between Umesh and Prakash in the ratio of 3/5 to 5th. Profit and loss account debit 9000, to Umesh capital account 5400, to Prakash capital account 3600 being profit distributed. Partners capital account will be transferred to their respective accounts. There will not be an entry for that. Let us proceed for the second stage of solving the problem, that is realization of assets. The assets realized as under goodwill 7500, number 1, stock 60,000, number 2, debtors 27,000, number 3. Here in all these three cases, cash bank will be debited and realization account will be credited. Bank account debit to realization account 7500 being goodwill realized. Bank account debit to realization account 60,000 being stock realized. Bank account debit 27,000 to realization account 27,000 being debtors realized. Machinery was taken over by Prakash at rupees 20,000. Here machinery is not sold but it is withdrawn by Prakash for personal use. So your Prakash account will be debited and a realization account will be credited. Machinery having book value 22,500 taken by Prakash at 20,000. Here loss should not be recorded separately. It will get adjusted in realization account. Prakash capital account debit 20,000 to realization account 20,000 being machinery taken by him. Furniture by Umesh at book value. Book value of furniture is 15,000. That means Umesh has taken furniture for 15,000. Entry will be Umesh capital account debit to realization account. Umesh capital account debit to realization account 15,000 being furniture taken by him at book value. Umesh agreed to discharge his wife's loan. This is a liability taken over by Umesh. So entry will be realization account debit to Umesh capital account. Realization account debit 6,000 to Umesh capital account 6,000 being his wife's loan taken by him. The creditors were paid at a rebate of 1,500. Creditors book value 7,500 minus a rebate discount 1,500. Actual amount paid is rupees 6,000. Amount is paid, so bank account credit, realization account debit. 1,500 rebate will not be recorded separately. Realization account debit to cash bank 6,000. Being creditors paid at rebate of 1,500. The expenses of dissolution amounted to rupees 3,000. Cash bank credit, realization account debit. Realization account debit to cash bank 3,000, being dissolution expenses paid. We have recorded all the transactions. Now we are required to record last two important entries, that is entry for profit or loss and entry for final settlement. These two entries we cannot record without preparing ledger account. The reason is these are the balancing figures. Now in this case, if we prepare entire ledger again, then it will consume lot of time. So we are required to prepare ledger as a working note, as a shortcut, where we are required to focus on getting the profit figure and the amount paid to partner in final settlement. How to do that? Let us understand now. We have prepared as a working note a realization account and partners capital account. We are going to record all transactions in these two working notes. We are going to post journal entries which we have recorded, but we will be recording only amounts so that we can find out quickly profit or loss on realization and final amounts payable to partners. Let us start now. Opening balances of partners capital: Umesh 69,000, Prakash 45,000. Umesh 69,000, Prakash 45,000. Profit and loss account 9,000. It is distributed among the partners. Profit and loss account debit to Umesh capital to Prakash capital 5,400, 3,600. Let us go through all entries. Bank to cash. This will not affect realization account or partners capital account. Second, realization account debit to debtor to stock to machinery to furniture. Total is 1,38,750. Sundry assets 1,38,750. RDD account debit to realization account 3,750. Sundry creditors debit, Umesh wife's loan debit to realization account 13,500. Here realization account is credited. Profit and loss account already we have recorded. Bank account debit to realization account 7,500. Bank to realization account 60,000. Bank to realization account 27,000. Prakash capital account debit 20,000 to realization account 20,000. This will be recorded in both the accounts. To the debit of Prakash, credit of realization account 20,000. Umesh capital account debit to realization account 15,000 is recorded to the debit of Umesh and credit of realization account 15,000. Realization account debit to Umesh capital account. This will be recorded in both the accounts. Realization account debit to cash bank 6,000. Realization account debit to cash bank 3,000. We have recorded all values which we got from the journal. Let us find out profit or loss. Total of credit side and debit side we are required to match. Total of credit side and debit side we are required to match. Total of credit side and debit side we are required to match. Debit total is heavy. It means there is a realization loss of 7,000. This will be divided between the partners. This will be divided between Umesh and Prakash in the ratio of 3:2. 4,200, 2,800. This will be transferred to the debit side of their capital account. Now we are required to close. Partners capital account. Final amount payable to Umesh 61,200, Prakash 25,800. We are required to record two entries for distribution of loss and for final settlement. Capital account debit 4,200, Prakash capital account debit 2,800, to realization account 7,000, being a realization loss distributed. Umesh capital account debit 61,200, Prakash capital account debit 25,800, to cash bank 87,000, being amount paid to them in final settlement. Here we have completed all journal entries. In such type of question where ledger is not asked, only journal is asked, we are required to prepare realization account and partners capital account as working note. We should try to prepare this working note quickly to save the time. In exam, we'll be having shortage of time. If we'll take more time for preparing partner's capital account, realization account as working notes, it will affect overall completion of the paper. Therefore, we are required to be very careful while preparing the working notes. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.